What's going on, guys? So the market's taking a pretty big downturn right now. As you can see, I'm down $2,000 on the day, but we are holding a pretty large cash position for any major dips that we end up seeing to buy up those dips. With this in mind, earnings is going to be a bit shaky. A lot of people are scared, they're pulling their money out of the market. So a lot of stocks are dipping. So we have to keep that in mind as well. So for this week, instead of selling a lot of cash cleared puts, I think some call credit spreads is going to be the way to go, just because of how bearish the market has been, and just kind of hedge your portfolios a little bit. So first stock we got on our list is going to be AMC, which reports earnings Monday after the market closes, which is today. And AMC, it is a volatile stock, so you are going to collect a pretty big premium on AMC if you sell some options on it. But we're not going to be selling some cash cleared puts, but we could. But we could also do some call credit spreads as well. And a call credit spread is going to look something like let's do an example. So we could do, as we can see, the premiums are pretty high. So we could do something like a $16. This is just an example. Keep in mind, you have to choose your own strike prices that you feel fit. So we're going to be buying the $16 strike and selling the one below it, the 15.50. Or you could even do the $15 just to make it a little bit easier in your calculations. And as we can see, we're collecting $14 of premium on only $100 of capital. So that's going to be a little bit over a 14% return in just 1 week because it is an expiration of May 13th. So we have to keep that in mind. And basically, as AMC stays below $15 by expiration, then we're going to be collecting a nice premium of 14%. Now, obviously, this is just one contract, so you're only collecting $14. But if you have a bigger account, you could do like 10 contracts, collecting $140 a premium in just 1 week, something like that. But if you do happen to be bullish, you could sell some cash cleared puts as well. And let's take a look at what that would look like. Let's head over to the sell and put. Um, and as we can see, premiums are pretty high. You can easily collect a 1% return on your money, even a 1.5% return in just a week pretty safely. As we can see here, an 8.5 strike is going to yield you over 1% return in just 1 week, as long as AMC stays above $8.50. So that sounds like a pretty good deal to me. I'll probably sell some AMC cash gear puts tomorrow when the market opens, just because of how high the premiums are. I don't see AMC dipping this low in that short amount of time. Because people are going to theaters, there's a lot of nice movies coming up, so I do think AMC is going to have some nice revenue. But right now, a lot of investors are scared, so we have to keep that in mind, and make sure to hedge your portfolios accurately and safely, and don't over leverage yourself when the market is this fearful. So next stock on our list is going to be Roblox, reporting earnings Tuesday after the market closes. Roblox is another stock that's been down quite a bit, highs of $134 per share down to $24 per share. So it's a really good dip buying opportunity if you like this company. And just because of how shaky the market is, like everything's selling off. So right now is a very good dip buying opportunity if you just want to buy and hold shares, or if you want to hedge your portfolio. Call credit spreads would be the way to go. We could even sell some cash gear puts with, look how high the premiums are. Absolutely ridiculous premiums. You can sell an $18 cash gear put and collect about a 3% return in a week. This is really indicating how high implied volatility is, almost 300%, which is kind of insane. If we head over to the May 20th expiration, maybe we can, yeah, the lowest strike is only $18. So if you want, you can sell one of these. A little bit risky. You're collecting a 3% return, but there's a high chance of profit, 84% chance. And your break even is around $17.50, which is a pretty big drop that Roblox has to do in 1 week, in a few days, at the current strike price, current stock price of $24 per share. So something like this would be pretty good as well. Or as we mentioned earlier and gave an example with AMC, you could sell a call credit spread as well. Because premiums are pretty high, you're gonna be collecting a lot of money, and overall, that's how you win in this market. So next stock on our list is going to be Coinbase, reporting earnings Tuesday after the market closes. Coinbase took a pretty deep dive today, down almost 20%. So it got absolutely killed. People who love Coinbase are really who haven't gotten in should definitely get in right now, because as you can see here, down almost 70% on the year. But people who are holding the stock are pretty hurting because it was almost $400 per share at one point, and now it's under 100. Um, but as you mentioned earlier, lots and lots of stocks are pulling back. During times like these, you just really gotta wither out the storm and just hold on for long term. The stocks eventually are going to go back up. But right now, people are pretty fearful. So I'm predicting that Coinbase is going to have some pretty high implied volatility as well. Um, yeah, we can go all the way down to a $55 strike. Honestly, cash here puts look really amazing right now, just because of how much stocks have already dipped. And if it dips even further, that's going to be a huge discounted buy. Current stock price $83 per share, and if we do get assigned shares on our cash here puts, we're going to be owning stock at $55 each, which is pretty insane. But if it stays above $55 by the end of this week, we are going to be collecting a nice 2% return on your money. So win-win situation in my opinion. Coinbase, another great stock. Um, if you're pretty bearish on the stock, you could do a call credit spread as well. Premiums are pretty high, something like, I don't know, we can go pretty high up the strike prices. Sell a 99 strike, buy a 100. Um, get rid of this, and we're collecting $25 of credit on $100 of collateral, which means that's a 25% return if Coinbase does not go above $100 per share. Something like this is pretty good, and when implied volatility is very high, as we can see, it's 260%, pretty high like Roblox. Selling options is going to be the way to go. That includes selling covered calls, cash secured puts, or even doing two-leg option strategies such as credit spreads or even iron condors to collect premium. Buying options is pretty risky in this market just because you can easily get IV crushed, and that means that once implied volatility goes down, the value of these contracts are going to get absolutely killed. So that's really what we're doing this week. Last stock on our list is going to be Disney, one of the more safer stocks on this list. And honestly, Disney's a great buy right now. I think they used to pay a dividend before the pandemic. So we'll be watching Disney to see if they can reinstate that dividend later on in the future. But Disney, sitting at a price point of $100 per share, took a really big deep dive over the past year. It's actually lower than it was before the pandemic, which is kind of insane. It's down 4% in the past 5 years. Great dip buying opportunity. Disney's a very good company. Um, so let's take a look at the options chain. So obviously you can sell some cash geared puts, and that is going to cost you almost $10,000 of collateral. So that's going to be pretty unfeasible for most people. What we could do is sell some call credit spreads. They are reporting earnings. Even though earnings could be solid, the stock could still dip just because everyone's pretty scared. They're taking out, they're going to cash positions, and overall, it's just a bearish week. So we can do something like selling the 115 and buying the one above it, the 116. This is going to be a 20% return in 1 week as long as Disney stays below our strike price of $115. So stuff like this is just an example. Make sure to do your own research, choose your own strike prices you're comfortable at. And you can make some pretty good returns. As you can see here, this strategy right here will make you 20% return in 1 week. Which if you can do that week over week, you're going to get rich very quick. But obviously, you're not going to win on every trade. So don't over leverage into a single position. So that's about it for this video. 4 stocks to watch as well as potential option plays. Thanks for watching.